Everyone tells you to buy in the same three states: Florida, Texas, Arizona. But here's the truth: by the time the crowd arrives, the profit is already gone. While most investors are fighting over overpriced condos in Miami, the real wealth is being built in silence. We've spent the last 6 months analyzing corporate relocation patterns and billion-dollar infrastructure projects slated for 2026. We aren't guessing based on vibes or social media trends. We're tracking where the institutional money is actually moving. Today, we're revealing the 2026 migration map. 5 overlooked boom towns positioned for explosive growth. I'm going to show you exactly why these markets are primed, the specific industries driving the demand, and how to secure properties before the price spikes. If you're tired of the bidding wars and want a strategic edge over the average landlord, this is for you. Most investors are playing a game of follow the leader. They see the headlines, they see the migration stats, and they rush into the same 3 or 4 states. Look at Florida. It's the poster child for this. Everyone and their cousin is buying there right now. But here is the cold, hard truth. When everyone buys in the same place, you aren't investing. You're competing. You're fighting 20 other cash buyers for a property that barely cash flows. Prices are pushed to an artificial ceiling while your cap rates are plummeting. This is the lagging indicator trap. By the time a market is trending on social media or highlighted in a basic blog post, the smart money has already made their profit and moved on. You aren't catching the wave. You're buying the peak. For high net worth investors, this is a disaster. You're risking massive capital for mediocre returns simply because it felt safe to follow the crowd. But the real wealth, the kind of wealth that creates generational freedom, isn't found where the people are today. It's found where the corporate headquarters, the new highways, and the billion-dollar infrastructure projects are moving tomorrow. If you keep following the herd, you aren't building a portfolio. You're just buying someone else's exit strategy. Here is the truth. By the time a market is trending on TikTok, the biggest gains are already gone. Florida was the gold mine of the last decade. But for 2026, the smart money is moving. Strategic wealth isn't about following the crowd. It's about following the capital. We aren't looking at pretty cities. We are looking at corporate relocations and multi-billion-dollar infrastructure projects. This is the 2026 migration map. First up, Columbus, Ohio. While everyone is fighting over condos in Orlando, Intel is dropping $20 billion into a massive semiconductor hub here. This isn't just a few jobs. It's a whole ecosystem of suppliers and engineers moving in. High-income renters, low entry prices. That is the perfect equity storm. Next, we have Huntsville, Alabama. They call it the Rocket City for a reason. Between NASA and the massive defense contracts, this city has one of the highest concentrations of engineers in the country. It's a recession-resistant market. When the economy dips, government defense spending usually stays steady. That means your tenants keep paying rent. Third, Indianapolis, Indiana. Indy is becoming the logistics capital of the Midwest. With the explosion of e-commerce, the demand for workforce housing around these hubs is skyrocketing. You don't need a luxury penthouse here. You need reliable, B-class rentals for the people keeping the supply chain moving. Fourth, the Research Triangle in North Carolina. This is the Silicon Valley of the East. Biotech and pharma are booming. These are high net worth professionals who want quality rentals but can't afford the California price tag. The growth trajectory here is a straight line up. Finally, the Silicon Slopes of Utah. Tech companies are fleeing the coast for the mountains. Salt Lake City is seeing a massive influx of corporate HQs. The demand for housing is outstripping supply at a dangerous rate. For an investor, that's a green light. Now, you can't just buy any house in these cities. You need data. This is where I use PropStream. I don't guess. I filter for motivated sellers in these specific growth corridors to find off-market deals. Once I find a lead, I run it through deal check. If the cash-on-cash return isn't hitting my target, I walk away. The market is the engine, but the numbers are the steering wheel. Stop buying where everyone else is buying. Start buying where the money is moving. Now knowing where asterisk to look is only half the battle. The real wealth is made in the execution. You can't just guess based on a video. You need hard data. That's why I use PropStream. It allows me to pull lists of motivated sellers and track corporate migration patterns in real time. It turns a blind guess into a strategic strike. But once you find a lead, you have to ensure the numbers actually work. I run every single deal through deal check. It calculates your cash flow, ROI, and cap rate in seconds. No more hoping for a profit. Stop gambling with your capital. Use the tools the pros use to ensure your 2026 portfolio is actually profitable. Check the links in the description to get started with PropStream and Deal Check today. Now let's dive into the final and most aggressive market on our list,